Guys, we're going to go over the one candlestick strategy that I have showed you several times here on the channel so far. Most of you guys have given me positive feedback. You have used the strategy and it is actually working for you. But some of you still have questions. I made a detailed video, but some of you guys still have questions that are not answered. So in this video, I am going to make it as precise as possible, explaining to you the exact rules that you need to follow to get entries with this one candlestick strategy. This candlestick strategy can be applied to scalping, to day trading, to swing trading, and to position trading, depending on what time frame you choose to trade on. Okay, this strategy also works on different asset classes or tradable instruments. You can use it on forex pairs, you can use it on gold, silver, or precious metals. You can use this on oil, okay, energies. You can use this on oil, you can use this on indices, all right? I have also looked at a synthetic indices chart, and I've seen that this can also work with synthetic indices. So you can do yourself some justice by backtesting on your own. Now, some of you have asked me to backtest for you some of these pairs or some of these instruments, but I don't have enough time to do all that backtesting for you guys. But you can do that for yourself if you really love trading and you want to be profitable. Go ahead and do a backtest on your own in your free time. Backtesting helps you to develop financial understanding that you need to be able to tackle the financial markets. So let's go on the chart and I'll show you guys this one candlestick strategy and how to use it. For the one candlestick strategy that you guys have seen me explain on this channel before, and I'm going to give you guys the basics again. I hope you guys will be able to understand all this. For those of you who have been asking me for the rules, entry rules, what can I trade this on a daily basis? Can I scalp? Can I day trade? Can I swing trade? Can I position trade? Let me just give you guys another look on how this works, okay? So for the daily time frame, let's assume that these are daily candles, okay? But this can be a monthly candle. This can also be a monthly candle. This is a bullish scenario, and this is a bearish scenario. These candles here can also be used as scalping candles when you use, for example, the 1 hour chart candles, or you use the 30-minute candles, or you use the weekly candles, or you use the monthly candles. It depends on what you want to trade. You've asked me, can this work on all time frames? Yes. If you're going to hold positions like for a whole month, then you use this candle on a monthly chart. If you're going to trade and hold your trades for 1 week or 2 weeks, you use this on a weekly chart as the higher time frame. If you're going to use this for day trading, use the daily chart. If you're going to hold your trades for a few minutes, okay, you want to scalp, you want to do intraday trading, use the 4 hour chart or the 1 hour chart as the single higher time frame candle that you're going to be marking. The anatomy of a candle, I have shown you that before. A bullish candle opens at the bottom and it closes on top, and it has its high and low. A bearish candle opens on top and closes at the bottom with its high and low. You have to understand what we call the candle internal structure. For example, if this is a daily candle right here, which we are going to use in this example as an illustration. On a daily candle, what happens on a lower time frame, like for example the 15 minutes chart or 5 minutes chart, is that this candle will open here like this, okay? It will create some sort of a range like this, or move like this, then it will go down to create this wick here, okay? This wick here is created when the market goes down like this. Then now it will start to create the body, this body of the candle here, okay, is being created when the market now starts to trend within the day like this, okay, making higher highs, higher lows within the day like that. And then it will go up, create a high, and then it will pull back down and close at that point like that. So it closes at that level, right? Let me just drop a line here so that we can have the close also there, right? And then let's drop a line here at the open. So this is how the internal structure of a candle looks like. And I explained to you that each candle has what we call manipulation, it has accumulation, and then it has distribution. So this is what the market does every single day and on every time frame. This is what the market does. It normally accumulates positions, it manipulates positions, and then it distributes in a trend. Now, you always want to only trade
when there is a distribution in the market. You want to trade within the body of the next day's candle. That is where you will get the trades correctly. Now, I explained to you guys last time. Let me first show you the bearish scenario. For the bearish scenario, the market opens on top like this. It can go up like that to create that wick. Then it now comes down and starts trending to push the candle to create this body here in the distribution phase. Then it might come here and then break below to create this wick here and then come back and close like this. So it is the same thing that happens in the bearish market, where we'll have the distribution phase, where we'll have the accumulation phase, where we'll have the manipulation phase. All right, so we'll have the market accumulating, manipulating, and distributing. You always want to trade when the market is distributing, that is within the body of the candle. How do you trade this? When you're trading this, the reason why I told you guys last time to use the purple zone, okay, to use a purple zone like this. Let me just change this to purple and then make it a bit lighter. All right, the reason why I told you to trade within this purple zone right here is because when you trade within the purple zone, you are trading within the distribution phase of the market or the trending phase of the market. Now, the following day, what happens is that these areas here, the market usually leaves orders there, okay? It leaves orders around those areas. So what you normally want to do is you want to wait for the market on the next day. For example, the market opens the next day here. You might open and do this like this. So you wait for it to pull back down into the purple zone here for you to start entering your trades when you get a candlestick confirmation like bullish engulfing, 3 white soldiers, or any other chart pattern around this area for you to enter on a buy to go up. The same thing is true with the bearish market. You only want to trade the bearish market. You only want to trade within the purple zone right here. You only want to trade between the close of that candle and the candle's high like this, okay? Even this one, you trade between the close and the low like this within that area. So you want to trade within this purple zone. Why? Because the market in these lower highs, it leaves orders. So normally the market will manipulate and go back to pick up those orders like this. Market might open the next day, then go up like this, and then now sell off from there, okay? So you want to look for your sales within the purple zone. Now, I told you last time that if the market goes and breaks above, for example, here, if it goes beyond the purple zone and breaks below and clears the low of that previous day, like this, if it does this and does not pull back up into the purple zone and give you a confirmation to continue buying, you leave that trade alone. If it breaks below like this and starts to give you some sort of a retest and continue lower, you know that market has reversed for that day. You can look for reversal entries here if you want to, but I don't advise you to do that. Just let that day go and wait for the next day. Likewise, on the bearish trend, if the market goes the next day and breaks above, gives a retest and starts going up, showing signs of going up like this, leave that day alone. If you want, you can take reversal trades here, but I don't advise you to take those reversal trades in this kind of setup with the one candlestick strategy. The one candlestick strategy aims to trade continuations in the market, okay? So you want only trade continuations within this candlestick strategy. I hope this makes it clear. Now, this illustration works for all time frames and any pair that you choose to trade. Go and do a backtest based on these exact rules that I have shown you, and you'll see that this strategy will help you. Even if you just win 50% of the trades or even 40% of the trades that you get with this strategy, using a 1-to-2 risk reward ratio, you will be immensely profitable. Okay, let me show you just a quick illustration on the chart for GBP CAD here. Okay, so this is a daily chart, and you can see, let's use this one to establish what I was telling you guys. So we can draw on this candle's high. Let me just make this a bit smaller so that it's clearer, right? And then we can draw a low on its low, and then we want to draw a small line and make it blue together there, because this candle has a tiny wick on top. You can see, let me zoom in so that we can be accurate with this strategy. Okay, so you can see it has its close there. All right, so we've drawn this, and then what we want to do now is we want to trade only between the blue line and the low. Okay, we want to trade only within that area. So we go now to lower time frame. Let me first put in this indicator that helps me to know the open and close. Open and close. You guys asked me which one I use. You use this one. Just type open and close and then choose open and close time interval lines, and you'll have these lines on your chart. Now these lines, they are by default showing the weekly time frame. So what you do, you click on settings and change this to daily. Okay, to day, like this. Click OK, then it will show on each day, right? So each day closes there. We go down to the 15 minutes chart to look for entries within the purple zone. This is the exact steps that you have to take, guys, to find your trades. If you go and start trying to tweak this strategy to fit the way you want to trade it, that is when you will start to find problems. Okay, just trade this strategy the best way that I've shown you to trade, following these rules. You can see that on the daily chart we have that previous day marked. So we are going to trade this most recent candle here, which has not had a daily line on it. We'll trade beyond the last day. Okay, so we'll go down to 15 minutes again. I want to show you this clear so that you understand. So this is the day that we are trading. We are only taking trades within this purple zone. We can move this purple zone to this current day, which we were trading at this line's close, like this. Okay, that line here. Okay, so we are looking for buys within the purple zone. So the market opens on this line here. The next day opens on this line, and then the market immediately pulls back down to the purple zone. It pulls back down. Now you want to take trades only when the market has pulled down to the purple zone and the market is in a London zone, which is this gray square here. London zone or New York within the purple zone. So in the London session, which is in this gray box here, we are looking for a bullish engulfing or any other chart pattern around there to enter trades. And you can see that we get a good bullish engulfing right here. I don't know if you guys can see here. You can see there's a bullish engulfing here, which you can use to enter your trades. If you miss this trade entry here, you can still enter here before the price breaks above. Okay, you can enter here, but this would be a good one if you're waiting to catch this trade. If you entered this trade right here and you had your stop loss below here, okay, like here, and you took 1 to 2, you would win this trade. As you can see, this trade would come out a winner. I put a stop loss at the recent low, but you can also, if you're going to hold this longer term, you can put your stop loss below the purple zone to be more safe. You can put your stop loss there, and then you can move this to a 1 to 2 like this. Okay, and then hold this trade longer term. This would yield you longer term result. That is how you enter a trade. This is a bullish example. You can also look for a bearish example with these same procedures. I hope this clears out some of the questions, some of the doubts you guys have had. I have answered so many questions about this strategy, and this video I just wanted to answer the specific question about how to enter this on a bullish side of the market, and also explain to you the rules a bit more clearly. Use this strategy and let me know in the comment section how it goes. If you want to contact me, please don't contact with requests on doing back tests for you. Contact me if you want to do something else with me. So that is it, guys. Thank you for watching. If you've not subscribed to the channel, subscribe to the channel, like this video, share it with your friends and colleagues. Join the channel membership down below. Click the join button. It is only $2 a month. You will have a star to your name when you comment on my videos. Thank you, guys. Until next time, peace and